Good afternoon, this is Rich Nelson with Allendale, covering the wrap-up commodity comments. Today is Friday, September 10th, 2010. Of course, a big day for grains and all the markets all around here. Let's just briefly cover some of the outside markets real quickly. It looks like crude up over $2, and we have the U.S. dollar unchanged almost. Those that had a slightly supportive tone to today's grain trade. As far as grains, let's just cover this report here real quick. First thing I wanted to point out is give a big thank you to all of our producing clients who called in, let us know exactly what's going on with these yields through our annual survey. Allendale's 21st annual survey suggested a yield of 162.3, looking at my board right here to my right-hand side, and today's number, 162.5. So certainly we appreciate all of your help with this survey, and certainly shown by these numbers that it is a valid source and certainly an important thing for you to monitor and also help out with. So once again, a very big thank you to everybody who helped us out with this 21st annual survey here. So hopefully have continued success here next year and continued goodwill on this end here. Also coming up for next spring, keep in mind we have that acreage survey that we do, so help us out with that one as well. But, of course, lower production on corn certainly made lower ending stocks. USDA brought in ending stocks down from 1.3 down to 1.1 billion bushels, and that pretty much was right on the dot as far as the average expectations. So corn can actually be called neutral based on the U.S. numbers here. We will point out the world numbers were a little supportive. They did drop ending stocks slightly here on the world ending stock numbers. That was countered by the weekly export sales for corn, running only about 725,000 tons. That was combined old crop plus new crop. So bottom line here, most of these reports, once you put them all together, were neutral for corn. However, we do still have a lot of excitement built up and people hoping that we'll have another drop in yield coming in next month. So at this point, we do feel current prices are correct based on these type of moves, based on the current ending stocks, but in order to get further higher prices, which the market is trying to push for, we certainly got to get continued expectations for lower yields here coming next month. Over the beans, down 15 cents here. We'll point out as far as the bean side, we did have USDA actually raise that yield number from 44.0 to 44.7. Looked across at our list of average guesses, and we note that out of the 25 analysts who put out estimates for this report, only 6 of them had actually an increase plugged in as far as that yield. So it was a little surprise there, and that increase in yield certainly helped to offset the ending stock increase here. So bottom line is ending stocks for new crop only fell from 360 down to 350 million bushels. That certainly was higher than the average guess of around 304. So bottom line for soybeans, this was a bearish report for old crop, or bearish report for new crop information. As far as weekly export sales, we'll point out those were slightly higher than average guesses, so that may have counted a little portion of that bearishness here. Bottom line for soybeans is 350 million bushels and $10 plus soybean prices. Certainly those two do not go well together here. But the thing that's holding these beans up right now is this acreage argument with corn. So that means we don't expect a major drop in bean prices here, at least in the near term. Over on the wheat side, down 1 1/4, being both higher and lower throughout the day. Looks like the traders decided on a fair price. As far as USDA's changes today, looks like the recognizable exports were doing a little better than expected. After moving those numbers, looks like we actually had a number very close to the average guess. So 952 million bushels from the USDA's last month down to 902. That was almost right on the average guess here. We will point out one surprise with the wheat numbers. World wheat ending stocks actually increased from 175 million tons up to 178. The trade, including ourselves, we're actually expecting a decrease. As far as some of the things that kind of stuck out, we'll point out the USDA actually increased the Canadian wheat crop by 2 million tons. That was a little bit of a surprise. We also point out they didn't drop anything for Argentina or Australia here yet. So as far as the wheat numbers, neutral U.S. numbers, we did get a supportive world situation and also a supportive export sales report, 1.6 million tons here over last week. With those in mind, bottom line right now is this market is still poised, trying to push a little higher here based on expectations of higher, or I should say lower yields coming in the next couple of months' reports. Over on the livestock side, kind of a mixed trade there. We see the hogs down about 12 cents here. USDA's report that came out each month and came out today also includes information for livestock. If you page the last 3 pages of that report, you will find livestock numbers. Not too many changes there for the pork information. Looks like the pork production number for USDA put out, they only dropped production for 2010 by about 35 million pounds from their previous estimate. That's not too much at all here. The bottom line is the amount of pork left for U.S. consumers after exports and imports and all that combined, down about 6.2% for 2010. That's certainly why we are trading at big premiums to last year's levels. 2011, they do actually still look for an increase of 1.2%. So keep in mind, the glory days of these high hog prices will still stay with us for a few more months. But by mid next year, we might actually start to see some expansion showing at the production, and maybe some lowering of export numbers here. So bottom line, we've got a great party working for us, and it's going to last for a few more months. But maybe by the second half of next year, we might see some weakening showing up here. On the cattle side, up 25 cents today. As far as USDA's report, nothing but really bullish information we can speak of. Though we did have USDA increased production estimate for the 2010 period for beef, that was more than offset by a large increase in exports and a good decrease for imports. So bottom line is the amount of beef left for U.S. consumers after exports and imports will be down 2.6% from last year. We'll point out that for 2011, they expect another 1.1% decline on that. So for the supply-based information for beef, it's bullish for right now, and certainly will be tightening a little more for 2011. So that's certainly good news on there. The only thing we're waiting for right now is demand. And by demand, I mean the U.S. consumer. Wholesale beef was kind of mixed, actually lower here today, so we still have that little drag on prices right now. And as we said before, we're still waiting on the U.S. consumer to come in. At this point, it's still more of a question mark as far as when that will happen. So for the near-term cattle information, kind of a mixed kind of ugly right now, but we expect it to straighten up here pretty soon. We'll point out, as far as this USDA report, we also talk about chicken a little bit here, as that is a competitor to both beef and pork. On the chicken information, once you throw in production plus the imports and minus some export numbers, the amount of chicken left for U.S. consumers up 3.6% for 2010. Another increase plugged in for next year, 2.8%. So we're going to have a build-up in chicken, and that will be a major competitor to certainly for pork and some classes of beef there. So bottom line, kind of a mixed bag as far as this whole report, but the market is certainly excited here on the grains and kind of mixed here on the livestock right now. Last thing, as I said before, I'll say it again, thank you very much to all you guys who helped us out with that annual survey, 21st annual Allendale survey. We're only off by 0.4%, and that's certainly better than a 10-year average, which is still great, of 0.8% error. So great job, guys. Thanks for your time, and hopefully we'll do better even next year here. This is Rich Nelson. Have a good trading day and a good trading next week.